Good afternoon, everybody. I hope you're having a fantastic day. Today, I'm going to be talking to you about the 7 key advantages of having a limited company. If you do stick around till the end, I've got 2 bonus ones, which are really big ones. And actually, I'm going to go through some of the disadvantages as well. Now, this video is something that I get, this question is, shall I have a limited company? I get asked this quite a lot, so I thought I'd do a more in-depth video to give you guys basically all the information that you really need to get started. Now, so do stick with me on this one. It will be a little bit longer in terms of my videos, but there's going to be so much information in here. Now, a little disclaimer. Don't take my advice because I am not a financial advisor. Now, this is really important. Whenever we're talking about tax or anything like that, I will tell you what I personally do, and I have notes so that I do get things correct, because I've done a lot of research for this video. But don't go out and make a decision purely based on this video. Go and do your own research. Go and speak with an accountant, because they are the people that study for years and years on this, and not someone that has, like myself, only done it personally and only researched on the internet to find these things out, okay? So hopefully this will give you an understanding. But again, go speak to a financial advisor, an accountant, to know this stuff super in depth. But okay, let's go into it straight away. All right, so let's get straight into it. So, tax and take home. So sole traders and partnerships pay income tax, while companies pay corporation tax. And so corporation tax are lower than income tax. So the benefit would normally be, okay, I want to go with an incorporated company. But as well as salary payments to employees. So as a director, I am set up as an employee from the company, so I can pay myself a salary, okay? Now that salary is very minimum. It's the minimum actually I can take to still get my state pension and stuff like that. Still be a member of society, because you want to be able to do those things. You want to get a pension when you retire. But as well, what a shareholder or a director will do is they will take dividends from a company, because they work out a different way within tax and stuff like that. So it can be more tax efficient to do it that way. The big thing here is if you take a salary from your company, the salary is subject to employee and employers' national insurance contributions, which are actually quite a lot. If you take a dividend, then you do not have to pay employers and employees' national insurance on that money. You still have to pay corporation tax, you still have to pay income tax, but you do not have to pay your national insurance contributions, which can end up being better for you. Again, this is where you need to speak with a financial advisor or an accountant to see if it's going to be good for you individually. But an example of this is that I will pay myself a minimum salary so I can still get my state pension. However, I will also take dividend payments, which are again subject to corporation tax. So I still have to pay tax on that money that's earned. And I will pay income tax depending on how much I decide to draw down into my company. And there is some tax-free dividend allowances as well. I believe at this time of recording, I believe it's £5,000. Do not quote me on that. Don't take that as law. Go and do your own research. Speak with an accountant. So the other thing that goes into your tax is that normally a limited company, has a wider set of rules around allowable expenses and reliefs than someone like a sole trader or a partnership. So there are basically tax deductible costs that you can offset against a company's profits, which means that you can get to keep more of your money. So that is, again, speak to a financial advisor or an accountant, because again, there are so many different situations and circumstances which are different for different people. So go and speak to one of them. So tax, take home, big one. Distinct entity. So a limited company has its own legal entity. So when you buy from a supplier, when you do any sort of business with anyone, that supplier is doing business with your company, not you as an individual. Okay, that is super important. So that also means that the company will survive the death, for example, of its directors or of its owners, and it also means that it's possible for the directors and shareholders involved with the company to basically change over time, but the company still to do the same trading, have the same legal entity and all that sort of stuff. So the company itself is completely separate legally to the actual shareholders or the directors or the owners of the company. Of course, you can cease a company to exist, and you can do that by dissolving it, by liquidating it, or there are other things if your company gets shut down by the government, all that sort of stuff. So that's that distinct entity, really, really important. And that kind of goes down into the next thing, which is limited liability. So the shareholders of a company have a limited, or what's called a capped liability for the debts of the business. So, for example, if you owed a manufacturer some money and you don't pay it, then that company could sue your company, or you have a debt to that company, okay? Now, that debt is not personally liable for you personally to pay. However, if you're a sole trader, your assets and the things that you own are liable. So if I don't pay, then bailiffs can come around to my house, they could take my laptop, they could take my sofa, they could take my TV, because I am personally liable for all of my debts to the company. Whereas a limited company, I am not personally liable unless I've gone through some, maybe, if there's any fraud or anything like that, and I've actually done something illegal. So that's where that kind of changes a little bit. So just don't do anything illegal, right? So that's really important. And what this does, what limited liability allows you to do, is take a calculated business risk, because you're not going to lose everything you own. If something goes wrong, you're not personally going to be kicked out your house. If you have the debt big enough, they can take your house away. So with a limited company, that's not going to happen unless, again, you do something super illegal. So that's super important. Name. A company name must be entirely unique with a limited company. So no two companies can be set up under the same name or even a similar name. So if you had, I'm not sure if you remember this if you're in the UK, the phone shop Phones for You, and that was spelled PHONES, 4 with the number 4, and then U was just the letter U. Now, I couldn't set up a company which is Phones for You, all spelled correctly and grammatically, because they're too similar, right? They're too similar. You wouldn't be allowed that. So basically, you can enjoy your name can only be registered to you. No other business can have it. Whereas sole traders, then they don't have this same protection. I could have, Johnny's Amazon selling business, and then you personally could set up the exact same name as a sole trader. And it'd be quite confusing, but you don't have any protection from that. So limited company, you have your own name, and it's protected by the government. Shareholders and funding. So whereas sole traders and partnerships, generally they have to raise new capital from their own resources, from their own sales and stuff like that, with a limited company, you can issue shares, or you can sell shares to get funding for your company, for new investors. Now, normally you'd go out and find that yourself, but if you ever do set up into a public limited company, then of course they can sell their shares to just the general public. So with a sole trader, you can't really sell shares in your company, whereas a limited company, you can sell shares. So if you want someone to come in at a 20% shareholding of your company, then they can pay you to do that. So they pay you for those shares. So it's a way of generating funding. Many people operate as a sole trader or a partnership because they perceive the cost to be lower to start up. However, you can form a limited company for, I think, as little as £12 directly from the government website. So the price of setting up a company is really actually very minimal. Most accountants will charge you all accountants will charge you to prepare the annual accounts for a limited company, and they actually normally charge you more on a limited company than a sole trader, because there's just more things that has to be done. So that's just something to be aware of. But actually, you can do all this stuff yourself. It is very easy to do so. The government makes it super easy to be able to run your company online. So if you are kind of competent with this sort of stuff, if you have any background, you can do everything yourself to save on cost. But personally, what I do is I pay my accountant to do everything. And I'm going to talk about that in a second, okay? So, selling and succession. With a registered business, with the limited company, you can sell it in the future. So if you are building a company to sell, then you can very easily sell that company and have what's called a clean break from the company. So that means you sell it, you sign them dotted line, and then you have nothing to do with that company again. So if you want to do that, if you want to build a business, generate some income, support your lifestyle, sell it, and then build another business. So great example of this is Amazon. If you want to start an Amazon business within a certain niche, you build it as a limited company, you sell it to someone else, and you can start another one and do exactly the same thing, rinse and repeat. So that's really, really a great thing you can do. Whereas with a sole trader, normally with a sole trader, that person really is the business. So it's a little bit different, sometimes a little bit harder to sell a sole trader company. Not of course unheard of. It's just a little bit different to do. Credibility. Now, the formation of a limited company can suggest that the business has essentially it's committed to performance, it's committed to being effective and responsible under its management, and it's committed to be there for the long haul, because it has this just perception of that it does cost a lot of money, and it's a limited company, all that other stuff. So it has that extra perceived value, and other companies will have more confidence in your company if you are a limited company. And that's something to mention, because sole traders and partnerships may not have a unique name, whereas you as a limited company, you will have a unique name, because again, once you register it with Companies House, it is yours, it's protected, no one else can use it. No one else can even use a name that is similar to yours. So you have that enhanced credibility with a limited company that you maybe don't get as much with a sole trader or partnership. So here are some bonus advantages. These are kind of really, they're super important, and I put them as bonus ones. I don't know why, but they're very, very key. So let's say it's the 9 key advantages of having a limited company. So pension, right? If you are a sole trader and you want to put money into your pension, you have to have money in your bank account to be able to do that. So you would have already paid income tax on that money that you're going to then pay into your pension. Now, of course, you might have paid 20%, 40% tax. So you get £100. You've then paid, let's say, £20 or £40 tax. So you only have, let's say, £60, like worst case scenario, right? Not worst case, but let's say you got £60. You then have to pay your pension out of that money. Right? Now, with having a limited company, the company can actually invest into your pension from your pre-tax profits. So before the money in the company has been subject to corporation tax and then your own income tax, you can actually pay that into your pension, which means that you can build up more money in your pension quicker. So that's something super important. And again, I would highly recommend speaking to a financial advisor for something like this that can talk to you specifically about pensions, and your accountant, again, how you can actually do that. The nitty-gritty stuff, but that's definitely something to be aware of for the future, is how you're going to be paying into your pension, because you want to get all this sort of stuff. Some people might not want a pension, but you want to get as much in there if you are going to do it, and you don't want to be unnecessarily paying tax when you don't necessarily need to. The next thing is splitting your income. So anyone that has shares in a company, you can send them a dividend, okay? So if there's myself in my household, I have my girlfriend, and let's say we have 2 kids, then I can actually make all those people shareholders in my company, and I could take advantage of their tax-free allowances, including their tax-free dividend allowance. So say, for example, I am the breadwinner for the household, and all the money I have to generate, I want to be able to leverage their taxable income if they're not earning, like the kids won't be earning, right? So you want to leverage their tax-free allowances so you can get as much money into your household as possible without paying if you were to take all that money directly to yourself, you would be paying more income tax, whereas you can split that across different shareholders within your company, and again, take advantage of their tax-free allowances. That is, again, something that you will 100% need to speak to a financial advisor or an accountant about, because they'll be able to tell you the ins and outs of that, how you can do it, how much money can be drawn down to the different people, and all that sort of stuff. So that's super important, and a massive, and that's actually a ginormous advantage. So yeah, that's definitely something to look into. So finally, let's go on to some disadvantages. Now, I'm going to leave these up on the screen, but pretty much all of these, they can be disadvantages, but they can all be solved with just one thing, right? That one thing is having an accountant. If you see this and you think, must adhere to strict record-keeping requirements, including taking minutes of meetings and recordings, all decisions taken by directors, right? That sounds like quite a lot, right? It sounds like a big deal. Just get your accountant to do it. I've had to do this in the past. So if there's any change in the company, like a change of address, change in shareholders, which I have done, then I didn't personally do it. I didn't fill out any forms. I didn't do anything. I said to the accountant, cool, this has happened on this day. Then all they do is they send you a letter saying basically what I've told them, and you have to sign it and you send it back. So they do everything for you. They file it with Companies House. They make sure that you are, you follow those strict procedures with withdrawing money for your business, all that sort of stuff. Just get an accountant, because they make sure that you do all these things and they don't ever kind of come back to sting you in the arse, okay? So if you're going to set up a limited company, of course you can do it by yourself. Just be very aware of what you're legally required to do. If not, go to accountant, let them deal with it, which is why I let my accountant deal with everything for the company. So like they deal with all of my tax affairs, they deal with literally every single thing. I even have my company, the registered address is my accountant's address, because if anything important, it needs to be sent to the company, it's sent to them, they deal with it, and if I need to deal with it, if I need to sign something or if I need to answer a question, they will just send me an email or they'll send me something in the post so that I can answer that or sign on the dotted line. So that's super important. So guys, I hope you've enjoyed that. Let me just give you a brief overview. So the 7 key advantages. Tax and your take home is drastically different as a limited company. You are a distinct entity which has limited liability, so that you're not personally liable for debts and liabilities of the company. Your name is unique. You can generate funding through shareholders and issuing shares. It's very cheap and easy to set up online. It's very easy to sell and pass on your company if need be. You have a bit more credibility as a limited company than you may do with a sole proprietorship or a sole trader. You are able to benefit from putting pre-tax profits into your pension. You can split the income between your household and kind of secretaries and directors. Some disadvantages, which all can be solved with very easily getting an accountant. So guys, I hope you have enjoyed this video. I know it's kind of been quite heavy on kind of just talking. And if you want to know more about this stuff, I would just recommend Googling some of these advantages and reading up in more detail, and again, seeking financial advice. But hopefully this has answered loads of questions that people have been asking me for a long time. So if you have liked this video, please, and you find it valuable, please hit that thumbs up button. Subscribe, of course, if you're not already and you want to see more. Turn on notifications, because I'm doing something very, very important and very cool coming next week. So you're going to want notifications turned on, and leave a comment if you do have any specific questions, or you have any additions to these advantages or disadvantages that you want to share and let other people know about. Again, be aware, don't give financial advice. That is very, very important. I don't want anyone giving financial advice in the comments unless you are legally a financial advisor and you are allowed to do that. Okay, but I hope you enjoyed that, guys. I will see you in the next video. Bye bye.